Gold's a different animal. It's much more armed in, and it's much more money, and it's really traded. So I don't know if it's going to get much more than 2%, but to me, it's just part of the bottom line of gold. It's a pretty significant bull market, and the key thing to remember about gold is the gold market absolutely loves President Trump.
With the tariff on gold, will it be harder or more expensive to buy gold in the US? And what will that mean for the volatility of gold prices moving forward?
It might be. I don't know what he's going to do. Obviously, it's increasing volatility. It might be. I don't know how it's going to affect jewelry to actually buy the physical gold and the bars. I don't know if that's going to matter too much. We'll see because, a lot of U.S. is a pretty significant amount of gold we mine ourselves, and we can mine more. And of course, there's plenty in storage, but this is yet to be seen. It's also there's so much volatility in these tariffs. The thing that, remember, I think the macro big picture of tariffs is the number one thing that's really emboldening the president to really hit hard with the tariffs is the rise in U.S. stock market. So there's potentially a lose-lose scenario there. The key thing I like to point out about gold, though, is gold has been a very significant bull market since it broke above the physical actual cash gold above 3,300 an ounce in April. It's put a really good floor around 3,300 an ounce. And I think it's just waiting for the next excuse to make a new high in the actual cash. Now, the futures are a good reason. The number one reason I think gold to really just take out and head towards 4,000 is just if we have a little more backup in the stock market, because gold is basically a safe haven, and it's an alternative to this AI-driven stock market.
Hey, Mike, could things change? I mean, last month, remember, U.S. copper futures, they crashed after the White House bailed from that 50% levy. Could we see this change?
Well, exactly. So what you've seen happen gold futures overnight is they put in a pretty good high. The actual high was just around, certainly it is now. It's almost unchanged. High was 3,500 an ounce. That's the thing. It's hard as a trader. A lot of traders are going to put on short-term positions, but they learn their lessons in copper. And staying long that contract it worked for a while, but you see when it drops 20% in one day, that means it just runs through the stops and it hammers people. So people are going to back off. It'll mean less trading, maybe more short-term stuff. But to me, it's just part of that big picture macro bull market for gold. And now it's about a support level on 3,300. It's just, to me, a matter of time it heads towards $30,000 to $4,000 an ounce.
So with all of this happening, what does this mean for gold as a haven investment right now?
Yes, well, that's the significant thing. On a total return basis versus the S&P 500, it's basically the same and almost beating the S&P 500 since 2017. The rock beating stocks is not a good sign. And to me, that's what I've been pointing out and very much worried about. Remember, we hear about this AI-driven stock market, human innovation, all the profits, yet gold's keeping up with it. So this is something I'm very concerned about. And I think by the end of the year, if we see a little backup in the stock market, there's going to be little to stop gold from breaking above 3,500 and heading towards 4,000. It basically needs a higher stock market and higher yields now to push it down. The key thing that's been happening is significant buying in ETFs. ETF inflows are up over 10% this year. That's after 4 years of outflows. That's up at 91 million total ounces. That's a lot. So sentiment has shifted from a investor standpoint, and central banks are still buying. Now, they've curtailed a little bit, but it's a very bullish picture for gold. I think they're looking for an alternative for the stock market, maybe a little bit alternative to the dollar. And every single day you see people like President Trump firing the head of BLS just when he doesn't like the data, and gold says, okay, I'll take some more.
All right, Mike, before you go, about a minute left, what are the consequences of the tariffs on gold? I mean, what questions should traders, should analysts be asking?
Yeah, the question is going to be what exactly is going to be tariff, how much, how long it's going to last, and then there's a question of on what aspects of the market is there going to be gold jewelry. Right now, the key thing that happened in copper was the refined copper that was tracked by the futures contract that was not tariffs. All the other products were pipes and wires and stuff. That's going to be the key question. Is going to be those gold bars that are delivered, those 100-ounce gold bars that are delivered to that COMEX future, the most active gold future on the planet. That's still up in the air. And then, of course, there's a question of will that change? And at this juncture, it's a question for Mr. Trump.